USD slides amid risk-on markets. Guys, good start to the week for risk appetite. And what do we know about risk-on markets? When stocks are moving higher, when risk-sensitive Aussie, AUD, NZD, CAD are all moving higher, well, at the same time, you tend to see havens under pressure, safe haven assets such as USD, JPY, CHF, bonds, gold, all under pressure at the start of the week. So, what is going on in markets? Why are we seeing USD and other havens come under pressure? Well, there's three main things going on really, and these are kind of themes that have continued to power risk assets higher ever since those March lows. So the first one is coronavirus curves continue to flatten. So if you're looking at the spread rate in major markets such as the US, Europe and the UK, and the death rate, they've all been slowly, gradually coming down, and that's despite these economies gradually being reopened. And this has been a big worry. So the big worry was, as economies gradually get reopened and people start to, mingle in public more and all this kind of stuff, the spread rate and the death rate of coronavirus would pick up. But that, at the moment, does not seem to be happening. And as the weeks go by, guys, the more and more we see this second wave, because they call it this second wave of coronavirus, the more we see it not happening, the better that is going to be for risk appetite. Meanwhile, and this is the second reason for risk on markets at the start of this week, central banks are pumping stimulus. They're printing, they've got the printing press working. We've had comments from the BOJ, the ECB, the BOC, all in the last less than 48 hours, all talking about easing policy. And what do we know about all the other major central banks like the Fed? Obviously the Fed have said they're not going to go negative rates, but they're still pumping. The Bank of England considering negative rates, RBNZ considering negative rates, RBA going to probably do more QE. So it's just all central banks pumping to try and support the economy. So these two first major factors, coronavirus, second spike not happening yet, and central bank pumping is a real help. And just finally, one thing may or may not be helping, might be looking into it a little bit too much, but there was a story last night that Bloomberg was running on USChina. Basically, it was saying something along the lines of China was playing down how much these new security laws in Hong Kong are going to impact Hong Kong's independence. These Chinese officials were talking about how, Hong Kong's still independent, blah, blah, blah. You can read the details below. But the point is, China was trying to play down the issue, which, if you're the US, you could take that as a slight positive. China, they're trying to calm tensions a little bit. But anyway, guys, the first two reasons really are the key things to watch out for over the coming weeks, because as these themes continue, more central bank stimulus, reopenings of economies without second spikes in coronavirus, we could see this risk rally continue indefinitely, really. But can US-China tensions threaten the rally? That is what we're going to find out in the coming weeks. That is pretty much it from me for now, and I'll see you in the next one.